Real assets are investments in agriculture, timber or timberland, water rights, fishing rights, and other strategies. Some investors define this as investing in natural resources. The key benefit of investing in real assets is diversification, to the point that in most cases, returns from those strategies have negative correlation to more traditional asset classes. They are also more resilient across economic cycles and have greater cash flow generating potential. Investors may consider a whole range of different strategies within real assets. An investor may invest in agriculture through buying a farmland and then leasing it to an operator, or buying an operating farm and taking on additional operational risk. Depending on the risk-return appetite, an investor may find a number of different ways to implement strategies in agriculture. Timber is another asset class that has been growing in popularity among institutional investors. Historically, US and Canadian investors were the first ones who started investing in those asset classes. What's interesting about timber, and investors in this asset class often joke about this, is that when financial markets fall, trees are still there. It's an asset class where investors can take a very long-term investment horizon and can use it as a downside protection in their investment portfolios. Asset classes such as water rights, fishing rights, and others have very attractive investment characteristics, as I mentioned before. However, the opportunity set in those strategies is fairly small, and skill is very important and rare. Given our large exposure in WMA portfolio to water rights, I'm going to spend more time discussing this asset class. Water entitlements are rights that give an entitlement holder access to a volume storage of water from a particular source for a consumptive use. Water rights are transferable, divisible, uniform, and valued at market. The market size of water entitlements includes approximately 28 million megaliters, and the market capitalization is estimated to be 35 billion, with 1 billion turnover every year. In recent years, investing in water rights has become more popular. And we expect the liquidity of water rights and water allocation market in Australia to increase over time. And this is predominantly driven by three factors. One is continuous market reforms, which improve the market efficiency and makes it easier for market participants to invest. Second is farmers' balance sheet rationalization, because it's very expensive to hold water allocations on balance sheets. And third is more market participants, such as institutional investors, coming in to invest in this attractive asset class. Investing in water rights is supported by one of the megatrends that we have in WMA portfolio, which is increasing demand for food. Agriculture production and increasing demand for agriculture output requires more water rights. Demand is expected to stay strong, while supply of water rights is finite, which means that perpetual water rights value will be increasing over time. The opportunity set in real assets is deep and diverse. However, the size is still relatively small, so there is not much capacity for large institutional investors to invest in this asset class. There are a few new emerging trends in real assets that we are observing. One is investments in greenhouses or sustainable greenhouses. These are the houses that are constructed in a way where water resources are reusable, energy sources are all renewable energy. They do not use fertilizers or other chemicals because it's supposed to be a controlled environment within a greenhouse. And then those greenhouses are leased to large-scale operators who pay rental income to the owners of those assets. These strategies are becoming very popular now in Europe and in the US, and we are aware of a few market players in Australia who are looking at this sector.